If you ever felt like you're playing a guessing game with your investments, you know how it is. One year, everyone's saying value is the way to go. The next, it's all about momentum. It's exhausting trying to keep up. But what if you could take the guesswork out of the equation? Well, today, we're diving into a disciplined approach that tries to do exactly that.
Right, so this is the big problem, isn't it? The factor guessing game. We know that these different investment styles, or factors, they do work over the long run. But trying to predict which one is going to be the star performer this year, phew, that's a whole other ballgame.
So let me just ask you straight up. If you had to put your money on one single style to win year in and year out, what would it be? Value? Quality? Momentum? It's not so easy, is it?
Well, this chart kind of gives us the answer. And the answer is there is no consistent winner. Just look at this thing. It's all over the place. In 2016, value was on top. Next year, momentum. Then low volatility had its moment in the sun. The leadership just keeps shuffling around like a deck of cards. It's almost impossible to time this correctly. And this quote just hits the nail on the head. We're not debating if these strategies work. They do. The real challenge is surviving the when. Sticking with just one factor can feel like a really painful waiting game. You might have to sit through years of underperformance, and let's be honest, that makes it incredibly tough to stay disciplined. Okay, so if picking one winner is basically a fool's errand, what's the plan B? Well, instead of betting on a single star player, what if you could build an all-star team where everyone gets to play? That's the whole idea behind the multi-factor approach. And here's what that looks like. It's actually beautifully simple. You take 4 of these proven factors, and you give each of them an equal slice of the pie. 25% each. No drama, no trying to outsmart the market. Just a simple, balanced exposure to 4 different ways of investing. And that's the key takeaway right there. When you own all 4 equally, you're not banking on any single one to carry the team. If one factor is having a rough patch, another one might be soaring. It's like built-in diversification. You're not putting all your eggs in one basket, especially when that basket might be out of favor for a while. All right, so we keep talking about this all-star team. Let's do a little meet and greet with the 4 core players. We're going to break down what each of these styles brings to the table. First up, we've got value. Think of this factor as the team's bargain hunter. It's always sifting through the market, looking for solid companies that are on sale. You know, stocks that seem to be trading for less than they're actually worth. Next, we have quality. This is the team scout who only recruits the A-plus students. It's all about finding those rock-solid, stable businesses. We're talking about companies that are highly profitable. You'll hear terms like high return on equity, or ROE, and that aren't loaded up with a ton of debt. Then there's low volatility. This is your defensive MVP. The goal here isn't to hit grand slams every time. It's to provide stability and a smoother ride. This strategy focuses on stocks that tend to have less dramatic price swings than the rest of the market. And finally, we've got momentum. This player is the trend surfer. It works on a pretty simple idea. Things that are already going up tend to keep going up, at least for a while. So this strategy is all about investing in the stocks that have been on a hot streak lately. So you've got the bargain hunter, the A-plus student, the defensive player, and the trend surfer. You put these 4 totally different personalities together on the same team, so what happens? Well, this is where the magic really starts. Now, this chart might look a bit technical, but the idea is actually super simple. It shows that these 4 factors don't really dance to the same beat. They often move in different directions. So when value stocks might be having a great run, momentum stocks might be taking a breather. The fact that they often zig when others zag, that's the secret sauce that can help make the investment journey a whole lot smoother. And that leads us straight to these benefits. By mixing it all up, the big goal is to smooth out your returns and hopefully avoid those really scary market drops. You're not banking on just one style to do well, so you avoid putting too much risk in one place. But honestly, the biggest benefit might be for you, the investor. A smoother ride makes it so much easier to stay calm, stay disciplined, and actually stick with your plan for the long haul. Okay, this all sounds pretty good in theory, but how does it actually work in the real world? Let's get down to the nitty-gritty of how this strategy is put together and how you could get started. So here's the playbook. It's really systematic. The fund simply invests in existing passive ETFs and index funds to get access to each factor. The number one rule is keeping that perfect 25% balance. Every quarter, they check in, and if one part has grown too big or shrunk too small, they rebalance it. It's all done by the rules, which takes emotion completely out of the picture. And check this out. This is what makes it so amazing. The minimum amount to invest is just 500 rupees.
That's it. A really sophisticated, diversified strategy like this isn't just for the big institutions anymore. It's for everybody, whether you've been investing for years or you're just getting started.
Now, if you are interested, you'll probably want to know these dates. The new fund offer, or NFO, opens up on February 20th. It closes on March 6th, and then the fund reopens for regular investing on March 18th.
Okay, and we have to talk about risk. This is super important. Because this is a strategy that invests entirely in stocks, it's officially categorized as very high risk. Like with any investment, you've got to make sure it's the right fit for you. And the advice is always the same. If you are ever in doubt, please talk to a financial advisor.
So we'll finish with this thought. Instead of trying to be a fortune teller, hopping from one hot trend to the next, this is an approach that offers one single disciplined solution. It's about betting on the whole all-star team instead of just one player. So the question for you is, could this be the right game plan for your own long-term goals? Definitely something to think about.